It's what we call a neocloud. It's a fancy way of saying it's a data center that just runs AI workloads, because prior to this point, lots of data centers have done all kinds of software and storage. And, Meta is pursuing this kind of everything strategy. Meta is not a cloud computing company, but it has a lot of compute demand. And so it's buying loads of chips from Nvidia and AMD for its own data centers. It's working on its own chips in-house that go into its own data centers. And then it's basically leasing or renting capacity from a number of other players. The difference with this Nebius deal is it's really big. It's $27 billion over 5 years, but up front, $12 billion next year for dedicated capacity. And that tells you that they've moved very quickly, and it's a very serious arrangement.
And it adds to its $3 billion deal with Nebius last year as well. You talk about Meta really diversifying and not betting on just any one company, right? I mean, it's kind of spread its chips everywhere.
Yeah, the idea is that in an environment where you are supply constrained, in other words, the demand that a company has for compute power is greater than what exists in the real world, they have found that diversifying is the best way to get the compute needed for different workloads. Meta is a very big and serious buyer of Nvidia chips. It's in the top 5 easily. But there is benefit to designing at scale. Like, the economics of designing your own chips makes sense, particularly when it's for running internal workloads, right? When I visited Meta's chip lab last week, one of the chips they've come up with, for example, trains the algorithm that does ranking and recommendations. In other words, how ads show up in your timeline. That's very specific to them. And so it's paid off the investment so far.
I'm just looking at the graph of this chart from Nebius. Went public in 2011, kind of bouncing around, not doing anything. And then around the February of 2022, at the price of about $20 a share, people said, oh, this is an AI play. So we go from $20 to $128. Where was that call, Ed Ludlow?
Well, there's also a history part of it, which is that it was previously associated with or a property of Yandex, which is a Russian cloud computing company. And so, just simply due to, what's the word I'm looking for? I guess sanctions. Yep. It changed itself. It's now an Amsterdam-based company. So that's a part of it. But it's completely, I'm visualizing the chart for our audio audience, but it completely coincides with the birth of the neocloud and demand specifically for data centers that just run AI.
All right, here's another story that just recently crossed the Bloomberg terminal. Again, big numbers. OpenAI in talks for $10 billion joint venture with PE firms. What's up with that?
Yeah, so we've just moved our own version of this story. And what I'm told by sources is that basically it helps a lot for OpenAI to have some money that's off the balance sheet, to go out there and find a vehicle, a mechanism to sell its software. And so what these guys are doing is they've set up an entity where those private equity companies in the first instance can go to all of the different kinds of companies that they own and are trying to make better in the classic PE style and say, you know what, why don't you guys use OpenAI stuff? It's pretty good. And so that gives OpenAI a way of going to market, and it gives these private equity firms some exposure to OpenAI and a mechanism to do business with them that also benefits all of their existing portfolio of investments.
Do we think that this is going to be the template that it starts to use, more of these off-balance sheet kind of ventures?
Yeah, I think this is very interesting because what I hear from time to time across Silicon Valley for all sorts of things is that there is benefit in having multiple entities, be that a geographic split or be it a business line split. And in part because you at scale with enterprises, the OpenAI private equity story is about selling OpenAI's platform to different enterprise companies. It's just a sort of old archaic world where it seems like going back to that model is what is in favor. But this news that broke this morning is the first real example I've seen of it. Yep. The idea has been spoken about in the corridors for a little while.